Hey everybody, welcome back to the channel. Today we are reacting to Jeremy from Financial Education's thoughts on Palantir. I'm not even going to try to say his last name because I don't know how to say it. Jeremy, if you're watching this video, I am a fan. I like your content. I like the analysis you give. I listen to you and your thoughts, and I absorb them, and I think they're valuable. The one thing I don't like about you is the clickbait. And I don't know if other people agree with me. I think at this point you've clickbaited so much, people just don't care. They kind of like expect it. The one thing I really don't enjoy from people who are good at their analysis is the clickbait stuff. And I get it. It gets you clicks. And what am I? A 6,000 subscriber channel talking to a 700,000 subscriber channel. But I just feel like there is a way to get people to click without literally having to be like, wow, in the title. Like that's the part that I just never liked. But nonetheless, I still respect you and I respect your analysis, and hopefully we'll be able to talk one day, because I do think he has a lot of good thoughts on the stock market. I also think he's buying the dip and he's sticking to his guns, unlike some of his other friends. He's like going all in on the market because he sticks to a philosophy. No shade at me, Kevin, but you know, it seems like we might have been at the bottom and maybe he sold at the bottom. I don't know. I guess we'll see what happens. Anyway, me, Kevin, just did a video, top 7 stocks to buy now, down 60%. One of the first ones was Palantir. We're going to react to his thoughts, react to his analysis, and basically think about what he thinks about the company. I already watched this, so bottom line analysis, he's bullish on the company, doesn't really see any problems other than an ESG problem, which we'll talk about in a second. And outside of that, these are his thoughts on the company. Let's get into it.
Palantir Technologies, PLTR, is a $13 stock here today. Market cap $27 billion for this company. 52-week range has been anywhere from all the way down to $11.75, all the way up to about $40 in the past 52 weeks. As far as analysts, they have a one-year price target on the stock of $21 for this one. So obviously, analysts are pretty bullish on this one. When it comes to Palantir, they're basically at the cross sections of data and artificial intelligence. And if you run a large corporation, Palantir is a company that can help you expand your company by using data and making the best business decisions possible. They're also massive in the government sector. They're pretty early days still actually in the corporate space. I mean, they're much bigger in the government sector than they are in the corporate space right now, which there's so much opportunities for this company with large corporations. Think Fortune 500 companies. Think a lot of the companies that are in the S&P 500. Also think about mid-sized businesses, and maybe even longer term, they get some products that are more for the small corporations, and they break apart some of their products more often, which is definitely certainly a possibility. You know, when I look at Palantir, I look at a company that is going to be a very, very sticky business model overall. That's going to be one of those that if you're a company and you start using Palantir, there's a high probability you're going to use them year after year after year for, 5, 10, 15, 20 years into the.
So that's a good point made by Jeremy. So he's describing Palantir, pretty much describing sort of the core thesis around artificial intelligence and data analytics. And the stickiness point, I saw him, I think, back in November, make a video about Palantir's sticky business model. And I think it's a really good point. It actually got me thinking about the value proposition of Palantir when I was loading it up really, really heavy during that time, which is that it's pretty sticky. I mean, you think about the core value proposition. You implement Palantir into your company or even a segment of your company, and they produce all these data analytics and give you all these insights into the part of the business, let's say just for accounting, because you're using it just for accounting. It's like, well, if you could do that for accounting, A, what are we going to replace it with? Because you need something to do that. And B, if it could do that for accounting, why don't we do that for sales? Why don't we do that for marketing? Why don't we do that for financials? Why don't we do that for fraud detection? I mean, there's so many different verticals that their data analytics software can play a role in, because that's the nature of a data analytics software. Combine that with the fact that it's really best in class at doing what it's able to do, you get a sticky business model where companies are going to be using it for 5, 10, 20 years, especially as they innovate and make the product even better and better.
For the future, essentially. So this one's setting up in a real good space that they call data the new oil, essentially, right? So when it comes to Palantir, first off, this is a cult stock. This is very much a cult stock. And that's actually really, really good for this company for the long term, because what Palantir is building into is essentially a shareholder base, right? And it's really focused on the long-term growth of Palantir. So this isn't a shareholder base that's going to get too hyped on like short-term moves with this stock. There are a lot of stocks in the market that if they move up 10, 20% or something like that, the shareholders are running for the exits. They want to take some short-term profits. The way I look at Palantir, that's not going to be this type of stock. Most people are in Palantir because they believe this is a 5x to 10x type stock over the next decade.
This is a really, really good point by Jeremy. And I actually didn't think of it. So props to him for sort of like getting me to think about this a little bit more. If you're invested in AT&T or Ford and they go up 10, 20%, like when Ford went from like what, 18 to 24, there must have been tons of investors taking profits because Ford was stuck, in a range for a while. Same thing with AT&T. I think it's been at like $29 for like 2-3 years or something, right? But obviously they give a dividend, so like even though you don't get high returns in the stock price, you get a quarterly dividend, so you're able to use that dividend. If you have like thousands of shares and it's like, I don't know what, 15-20 cents per share, then you're able to make some money off just holding the stock, which is like a decent strategy for investing. But when you're talking about high growth tech companies, Palantir, like on this video, it's up 7%. 7% on your money is not bad. I mean, most people don't get 7% after a year. So if you were to invest, $2,000-$3,000 and be up 7%, that's a decent profit you could take. But if you're into Palantir, if it were to rise to 30 tomorrow, I mean, I'm not selling. And I don't think many people in my audience would sell. Now, maybe you guys would sell, but if you do, it kind of goes against the entire thesis of being invested in this company in the first place. Because when it gets to 30, you're kind of like, all right, well, when are we going to get to 40? When are we going to get to 50? When are we going to get to 100? Because if you're able to go to 30 from 13 in a relatively short amount of time, let's say it were to happen in the next couple months, there is zero reason why you sell. Unless the macroeconomic dynamics make it obvious. So in January, when it went to 45, it was obvious. And I wasn't invested in Palantir at the time, but if I was, and I was knowledgeable about the market, probably would have been obvious to time the market in that case, even though you probably shouldn't time the market. But now that we've been through the bear cycle, and it's not necessarily over yet, but the NASDAQ was down 12%, growth stocks are down almost 70-80% from their highs. Like, we've been hammered. It's happened in the month of January. We got through the worst month of January for the stock market ever in history. It's done. That doesn't mean there's more pain, but that does mean the worst month is officially over. I don't think February will be the second worst month in a row. That usually doesn't tend to happen unless we're approaching a recession. So if that's the case, like if it were to run up, unless the macroeconomic dynamics are like, hey, like rate hikes are going up, investors are really scared, their inflation's still bad, supply chain's still bad, which all of that in the next couple months is going to tend to be better. Like inflation's supposed to go down in the next couple months, supply chain bottlenecks are supposed to ease up, and there's some evidence that they've already been easing up. And interest rates hikes have really been baked into a lot of these stock prices because like after the Fed released its minutes from December, the market crashed, right? So people were like, all right, we're going to get some interest rate hikes. That doesn't mean when they rise interest rates, we're not going to have a little bit of a correction. But the worst of it seems to be accounted for, which means if Palantir is able to withstand all of that and then go to 30, the reason to sell seems silly because there's not a unique cliff that we're about to fall off of. It just seems to be like, all right, we had great growth. Let's see if we can keep having great growth because the expectations are phenomenal growth for this company. And there's not going to be any more Alex Karp insider selling for the next 10 years, right? So it's not going to get to 30 and he's going to be like, all right, I'm going to cash out, right? He did that already because of 10-year options that he already had. So a really good point, which is that when you develop a cult stock, you have a community of people that care so much about the company. They see so much about the long-term vision of the company that they don't sell. This is the reason why Tesla is able to remain a $1 trillion company or close to a $1 trillion company, because you have all these passionate investors, someone like Dave Lee or Rob Maurer, that were in it from, 2013, 2017, 2018, and they're not selling. And if Tesla were to go to 2,000 tomorrow, I think someone like Dave would not sell. And you have millions of Daves across the world in hedge funds and institutions and retail investors that are like, this company is going to change the world over the next 50 years. Why would I sell? Like, it just doesn't make any sense. But that only happens when you get a cult stock following. And if you're able to get a cult stock following, it's much more easier than for the selling pressure to not happen, even though there's a massive run up. So that's a good point by Jeremy.
And so they're not going to run out with a 10% gain or something like that. And so that's the strong part. And you've got a lot of folks that are willing to educate folks on the stock, which I think is really, really important. It's built into a cult stock now. The main negative Palantir has, and the only main negative this company really has at this point in time, is really around bad press they've received over the past year or two, and they could receive more bad press over the coming years as the company gets bigger. Outside of that, there's not really a lot you can say. The competitive landscape's shaping up really, really nice for them. And like I said, the business model is going to be a very, very sticky business model. This company is expected to be profitable in 22. The main question for this company is how profitable will they be in 22? But the company is expected to be profitable. 10 analysts cover the stock. On average, they expect the company to be profitable, positive EPS in 22. That's big, okay? And then you look at the revenue growth. As far as what, Karp has said, the CEO of this company, the one that really runs this ship, he says that this company will be able to grow at 30% plus per year, which is huge. And they're expected to grow 30% in 22. So I look at Palantir as an extraordinary opportunity. This is one of those that's a pretty easy buy here. And if it goes down in any meaningful way over the coming months or quarters or whatever, it's just kind of an easy buy the dip type opportunity for stock out there. So yeah, I look at Palantir as a great opportunity. I really like that one.
All right. So that's, I mean, Jeremy's been pretty consistent from when I followed him back in November talking about Palantir. He thinks that when he was at 17, he was ready to load the boat. He was like, these prices are ridiculous. And now it's at 13. It's a very obvious buy. And his main argument is like, look, there's a perception problem, but outside of the perception problem, which is like they sell your data, privacy, CIA, all that stuff, and you have people spreading that propaganda, I think a lot of that will go away as they produce results because like results tell all. Then that perception problem kind of goes away. The competitive landscape isn't that big. So it's kind of like, well, then what's the issue, right? Like, what's the bearish argument against the stock? Like share dilution, it's like, it's not really the biggest argument in the world. Insider selling, that's just, you're miseducated. That's not really what it's about. It's more about options and tax law and taxes that people have to sell for. SPAC investments, it's like, okay, that's a risk. Like you did 14 SPACs. If even 2 of them work, you've got like reoccurring revenue from them. So it's like, that's not that big of a deal. So it's like, at these prices, what necessarily is the bearish argument for a company? The only bearish argument to me is you don't understand the company, you don't understand the growth potential of it, which is like fine. If that's the case, then you just don't understand that. But like a true reason why they are bad, it's hard to. There's not a product reason. There's not really a sort of like deep financial reason. It would just be like they're not growing fast enough, but they grew 40% in 2021. So it's like in 2022, if they can keep growing at 30%, which are projections, and hopefully they sandbag those and actually grow at more than 30%. Then you're talking about a stock that like has really, really good potential. And I think Jeremy's recognizing that as well. This whole concept of data being the new oil, if they're able to capitalize on that going further, then there's a good chance they can ultimately win. So those are my thoughts on Jeremy's thoughts. Let me know what you guys thought about his thoughts in the comment. Let me know if you're a Jeremy fan. All love to Jeremy. Again, I just don't love all the clickbaiting, but still love his analysis. I think he's a really, really smart guy. He understands the stock market. Some of you may disagree. That's fine. I don't like all of his takes, but this is one of those takes I like. I'm still not in TTCF, Jeremy. I listened to some of your analysis. I don't fully get the story. I understand like the world's going to go more vegetarian, vegan, whatever. And like that's sort of the argument you're going for, but I don't fully get it yet. But once I do fully get it, I will definitely make a video saying whether I have decided to purchase a stock. So let me know if you guys are in Palantir and TTCF in the comments. Thank you guys for watching. My name is Mitt. I'll see you in the next one.